Good morning, everybody. It's Monday, June 17th, 5:26 a.m. Central Time. Hope you guys had a nice Father's Day. We're going to roll straight to the December and November quotes this morning. December corn futures down 4 3/4 at 465.5. November soybeans down 12 at 1137 3/4. December Chicago wheat down 13.5 at 636 3/4. December Kansas City wheat down 13 1/4 at 641.5. December spring wheat down 6 3/4 at 678 1/4. Let's start off with the weather and this heat.
The eastern Corn Belt is likely to remain hot and dry during the next several days. Temperatures are likely to trend 5 to 15 degrees above normal. Rainfall this week is likely to be confined to western and northwestern areas of the Corn Belt. A system moved over parts of South Dakota, northern Nebraska, Minnesota, and northwest Iowa early this morning. Many of these same areas will see additional rain during the next 5 to 10 days. The 6 to 10 and 8 to 14 day government maps favor odds of above normal temperatures for most of the U.S., but also favor odds of above normal rainfall.
I'll level with you guys. I thought when I saw these forecasts yesterday afternoon, I thought this was a friendly looking deal. It's mid-June, Father's Day weekend has passed, and we've got a bunch of heat and dry weather in the forecast, especially for the Eastern Corn Belt. I mean, you look at the forecast for Illinois, Indiana, Missouri, Ohio, Kentucky, Tennessee. There's not going to be much rain at all over the next 7 days. The way that this looks, and the temperatures again are going to trend 5 to 15 degrees above normal. So in my head, I mean, I've been through this before. This looks like a friendly forecast to me, and the market did not perceive it that way. Corn futures opened lower last night. They traded close to unchanged at one point. The fact that wheat futures continue to collapse is problematic, of course, for the corn market. Now there is some divergence in the models. I want to talk about weekend rainfall first. A couple of these areas in Minnesota caught like 7 or 8 inches of rain over the weekend. I think that was isolated. But there's some areas that are catching more rain now that have probably turned too wet, I would imagine. If you guys have comments or thoughts on that, let me know. Let's get to the divergence. So this Euro through the next 10 days, the Euro model, which is on the left, if you guys are watching, keeps most of Illinois, Indiana, Ohio, Eastern Corn Belt dry, where the GFS introduces rain returning to the forecast here in that 5 to 10 day period. So maybe the market is trading the idea that this GFS is more correct than the Euro model and that you're going to see rains return. Still, the heat is being forecast everywhere. I mean, no matter which maps you look at, the heat's everywhere and it looks like it's not going anywhere. So I don't know. I mean, honestly, if I was forced to make an opening call last night, I would have said higher in corn probably, and I would have been totally wrong. I think this is supposed to be bullish, but I've been wrong before, so I don't know.
Drought is expected to reduce Chinese grain production. The northern region of China, which is known for its grain production, has reported planting delays and lower yields due to dry conditions. According to a Beijing based agricultural consultancy, corn production during the 24-25 season is expected to decline 2.3% to 282 million metric tons. Wheat production is estimated to fall 1.2% to 134 million metric tons. The Chinese government, however, is projecting that both crops will increase. High temperatures in the coming days are expected to worsen drought conditions.
We had some good maps regarding Chinese weather in the email this morning. Premium subs, check that out. This is like big news. It was in Bloomberg, AP, a couple other news outlets running stories on the heat in China. There is some rain in the forecast, and it's not super widespread, but it's maybe widespread enough to the point that maybe the market's not going to care about this right now. But China's a huge corn producer. We had some maps in one of the videos, or some charts rather, of one of the videos last week. I think they're the number 2 corn consumer globally, or number 1. It's US and China are 1 and 2. They grow a ton of corn. If they run into a crop problem, it could absolutely result in more imports. But for now, I think very short term, it looks like there's a little bit of rain in the forecast, which may ease the concerns.
So, if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
Matt was on, I believe, Thursday last week. Good at 70 miles per hour. We talked about crop thoughts. We talked about USDA data and crop ratings, that sort of thing. We talked about cash markets. There has been some basis strength in some areas of the country as it relates to corn in particular. We talked about the apparent lack of soybeans in the country despite these big carryout projections. USDA snapshot was out on report day last week, and it was out within 10 minutes of the release. I do a quick 3 or 4 minute overview, tell you what you need to know about the reports. Were you guys making fun of me again on Friday?
Yeah,
I
we
didn't
were
watch.
sure we were sure trying to. We took a few hits.
I didn't watch the video. Social Media Circus was on Friday. Pete was on last night, did a pre-open weather update. Pete's been using the crop profit charts. Crop Profit was cool enough to let Pete use their stuff for our pre-open weather videos. And this is must-watch stuff all summer long. And Pete's going to be doing it through mid-July at least. If you guys want to see the premium stuff, this is the best way to support what we're doing here. We don't make any money off the podcast. YouTube pays us nothing. The only way that we're able to get up and do this every morning is through the premium subs. You get our morning email at 5 a.m. Central Time. It includes a ton of information, a ton of stuff that we don't show you here on YouTube, charts, graphics, all that stuff. There's a new premium video every single business day. They're blasted out via email at 10 a.m., also via text message if you're on the list. Give that deal a shot. It's $50 per month. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
Fund traders have slightly increased their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending June 11th, the funds were net sellers of 384 contracts of corn. They were also net sellers of 21,000 contracts of soybeans, and they were net sellers of 14,000 contracts of SRW wheat on the week. The funds have not held a net long position in the corn market since August of last year.
So look at this chart of corn, soybeans, and SRW wheat combined net fund position. And it's like the short covering event's over. We saw a short covering event where funds covered some shorts. They never got long anything, but they got close to flat the soybeans. And now it's totally reversed course. And they're again in sell mode. So this is not good. And if that was the peak of your short covering event, if that was as good as it gets this year, this is not going to be a fun year. And it really hasn't been to this point.
The outlook for Ukraine's 2024 grain production has increased. Ukraine's ag ministry is forecasting total grain production to reach 56 million metric tons, up almost 7% from its previous estimate. Wheat is estimated to make up 21 million metric tons of the total, and corn 28.5 million metric tons. Grain exports for the 24-25 season are expected to total 43 million metric tons, with 15 million metric tons of wheat and 25 million metric tons of corn. With approximately 2 weeks left in the 23-24 season, Ukraine has exported 48.7 million metric tons of grain. According to the ministry, Ukraine's ending agricultural stocks for the current season are comparable to those prior to 2022 when Russia invaded Ukraine.
Here's your chart of corn and wheat production in Ukraine, according to USDA at least. And yeah, we're way below pre-war levels. You're kind of getting back to like levels that you saw back in the 2015 through 2018 timeframe, a little bit below that. Ukraine had crop problems too. They had some issues with their winter wheat crops, same as Russia. And wheat futures, as I mentioned, have collapsed. And it's not that those crops have gotten any better. The Russian wheat crop's going to be off 10% at least from where we thought it would be maybe a few months ago. And wheat futures rallied on that, and now they've given back just about all of it.
Former President Donald Trump has suggested eliminating the federal income tax. The plan would raise tariffs on all imported goods to a point that would allow for the federal income tax to be removed. The idea, however, is impractical for a multitude of reasons. Importers cover the cost of tariffs on imported goods, making the goods more expensive. That additional cost is then passed down to consumers in the form of higher priced goods. Also, exporting countries could retaliate against the tariffs in some way, possibly sparking a trade war.
You'd have to think that this proposal eliminating income taxes would be impossible, right? Like it would never get through Congress. So you would think that would be impossible. So there's two things here. I mean, the first one that's more likely is that there's tariffs. And I think if Trump gets elected, there will be additional tariffs on China in particular. And that's going to be a problem for our markets. When you think about the soybean flow, so if Trump's elected, he won't be inaugurated till January. We've already shipped most of our new crop beans by that time, or a good chunk of them. We ship a lot of our beans like just right after harvest. So I'm not sure that that's, the more I think about it, I'm not sure that that's the reason why China's avoiding U.S. soybeans at this point. I could be wrong about that. The other thing is the income tax thing. You know, we used to be a proper country who cared about taxes, and like we'd get really upset when people raise taxes, and now nobody cares. I don't know. I mean, no taxation without representation. I don't feel represented personally when it comes to
Same.
our federal government. Do you?
No, not at all.
I think a lot of people feel that way in any case. What did cattle do last week?
They were higher on Friday. Feeders closed an average of 413 higher. Live cattle closed an average of 241 higher. Cash cattle prices reached all-time highs last week. In the north, cattle sold between 195 and 196, which was $5 to $6 higher than the previous week. In the south, cattle sold at 186 to 187, about a buck higher from the prior week. Box beef prices gained some ground last week. Choice closed Friday at 319.89. That was up 314 for the week. Select closed Friday at 303.81. That was up 297 for the week.
Outside markets on Monday, U.S. dollars about flat. Stocks are off a little bit. Bonds off a little bit. Crude oil is down 4 cents in the August WTI at 78.01. Hey guys, quick note: we have a chopped up week this week. Wednesday, the markets are closed in observance of the Juneteenth holiday. So we got a normal close Tuesday, and then we're closed Wednesday. Markets will reopen on Wednesday at 7 p.m. Central Time. Just a heads up. Have a great day, guys. We'll talk to you Tuesday.